So here in this video, we will be breaking down what happened last week with all of your good news, what to expect this week on the economic calendar, and big earnings this week. You do have earnings specifically from ARM that will be important for broader markets, and I am expecting a large move. First up, let's start with the earnings calendar for this week. Now, there's a lot of different companies that will be reporting earnings. None of them are your large cap names. Your big tech earnings are over with until you get Nvidia, which is still a couple of weeks away. But these companies can move their stocks in their sector, and there's a lot of different sectors reporting earnings this week. First off, tomorrow, pre-market, you have Spirit, BioNTech, you have Tyson, Biosyst, and some other random names. Tomorrow, in after hours, you have Palantir. That one's going to be a big one. That can move, obviously, your software stocks and even potentially heavily shorted stocks, more, I don't want to say meme stocks, but more in that sector. Think that sector. You have Lucid, which can directly affect EV makers and auto companies. Realty Income, Hims and Hers, Microchip, Axon, Teradata, and Cohort. Obviously, Microchip could be important for semiconductors heading into the end of this week when you get some AI earnings. Tuesday, pre-market, you have Walt Disney, Celsius, Datadog, Crocs, Nikola, Ferrari, BP, the Geo Group, couple other smaller names as well. Disney could be a pretty important one during their path of recovery. They've started to kind of outline how they're going to recover. If that is continuing, well, Disney going up could be really good on earnings. Datadog, another one of your AI stocks, deemed as an AI stock to some degree, so that one could also be important for the broader markets. Now, Tuesday and after hours, you have Rivian, Arista. Arista will be huge for the AI trade as well. Upstart, Win, Lyft, Oxy, Twilio, Toast, and some other names. Wednesday pre-market, you have Uber, Shopify, Affirm, ACM Research, Avendel, Toyota, Emerson. That's actually my son's name, Emerson. And that's pretty much it. Wednesday and after hours, you are going to get ARM. ARM's going to be your biggest earnings of this week by far because they do a lot of their business with NVIDIA. After all, NVIDIA was trying to buy ARM. Now, ARM, I'm not confident in ARM earnings, okay? Why I'm not confident in ARM earnings is because the stock is super expensive. It is far higher than any kind of fair value that you can put on the stock. So even if the earnings are not bad, the stock is probably priced for something that is much better than what we're going to get. And that's why I would be a little bit careful heading into ARM earnings. Now, if ARM were to outright do bad, well, the stock could plummet. But my expectation is anywhere from 5 to 10% down for ARM. The stock's going to price in at least that for earnings. So I don't know how much of an options trade, for an example, there's going to be, but ARM is probably not going to do great. I'll be surprised if ARM goes up after earnings. Then again, they have fallen a lot already, but that's just because they were egregiously expensive. Now it's just expensive. Still, I think not really priced accordingly to the business. You do have Robinhood, Airbnb, AMC, The Trade Desk, Beyond Meat, AppLovin, Energy Transfer, Duolingo, and Exact Science that will also be reporting earnings. Airbnb could be another important one for specifically, real estate and travel stocks. So think that sector. Thursday pre-market, you will have Roblox, Warner Bros. Discovery, GigaCloud Technology, Sundial, Plug, Kronos, Canadian Solar, and Cedar Fair. Thursday after hours, Marathon Digital, SoundHound, CleanSpark, Unity, Vuzix, Caliber, Blink, and Indie. And then Friday pre-market, just bunch of random companies. So quite a few different sectors that will be reporting earnings this week. Shopify, I guess I should have pointed that one out as well. Shopify can have an effect on big tech, especially can have an effect on a company like Amazon. Overall, if there was one stock that will move the markets this week, it is ARM. And I'm not confident in ARM's earnings. But again, ARM has fallen quite a bit, so maybe a drop would be smaller for ARM, even if they come in with good or bad earnings. I'm just not that confident in ARM. I mean, the stock was just trading at a 1,400 times PE multiple, trading at 5 times the 2028 valuation of NVIDIA. That's just not sustainable. And you've started to see that come down, but it's still trading at a much higher premium than something like NVIDIA. Now, as far as the economic data for this week, it's a lot of small bits of data. A bunch of Fed speakers, but some of this data can be important and move the market. So on Monday, you are going to get Fed Barkin that will speak right at about noon. Fed Williams that speaks at about 1 p.m. So following last week and Jerome Powell, the markets want to see, is the Fed really dovish, or is Powell just dovish? But are Fed officials starting to see signs of better things, right? Are they starting to see signs of maybe they should start cutting, or are they more on the fence? That kind of language will be important for stocks this upcoming week. So starting off tomorrow morning, you're going to get some Fed speakers. Now, you're also going to get a loan officer survey. This can be very important for judging the state of credit markets. If the loan officer survey, a very well-respected and well-followed survey, if that comes in bad and loan officers are not feeling great, yeah, that's going to be a problem. And maybe that might drop 10-year Treasury yields and might increase the odds of rate cuts coming sooner. But we'll have to wait and see. So that is it for Monday. For Tuesday, you will get Fed Kashkari. This speaks at 11:30 in the morning. A 52-day bond auction. That's a crazy one. A 3-year bond auction and consumer credit change. Consumer credit change comes out at 3 p.m. The last month we did have a big move based on this because we were expecting consumer credit to go up a lot, and it actually did not. So you did get a big move the last consumer credit change you had for the month of February. This one will be for the month of March, and you're expecting around $17 billion. So if it comes in lower, that means people were not spending as much money. If it comes in higher, well, that means people were spending more money. Used car prices month over month are expected to come out as well on Tuesday. We don't have an exact time on this, not sure exactly why, and we don't have an exact estimate or expectation, not sure exactly why, but this data will be important when it does come out on Tuesday. Used car prices year over year will also come out. Last month, used car prices year over year were negative 14.7%. Month over month, used car prices were negative 0.4%. So if that number comes in anything like that, that's probably going to be seen as good, at least for inflation. Now, Wednesday, you're going to get a lot of oil data and mortgage data, mortgage applications for last week. But Fed Jefferson speaks at 11 o'clock in the morning, and you do have a 10-year bond auction at 1 p.m. These 10-year bond auctions tell you a lot about supply and demand in the Treasury market. So if there's a lot of buying of Treasuries, that will send 10-year Treasury yields lower, and that will be good for stocks. If there's not a lot of people that show up for the 10-year Treasury auction, then yields will go higher, right? As it kind of works like a dividend stock. If everyone wants to own a dividend stock that you own, the yield is going to fall. Not for you because you bought it already, but for anyone else buying it, let's say the dividend stock doubles, the yield's going to fall by 50% as long as the dividend stays constant. If nobody wants to buy that dividend stock that you own and people are selling that dividend stock, well, the yield will go higher. So more demand for the 10-year Treasury auction will cause 10-year Treasury yields to fall, and sometimes you get quite a big reaction. Now, last week, you had a big reaction in the Treasury markets. Even on Friday, 10-year Treasury yields fell under 4.5%, currently at 4.497%. So I guess if you're rounding, you would round up to 4.5%. But 10-year Treasury yields were down about 7.5 basis points alone on Friday. So that 10-year Treasury auction will be important. Now, you will have Fed Cook that speaks at 1:30 p.m. as well on Wednesday, and that's pretty much it. On Thursday, you will have the Bank of England interest rate decision. You're expecting them to not change rates at all. If they do cut rates, well, that could probably get our markets pretty excited, but we'll have to wait and see. Initial jobless claims will be coming out at 8:30 as well on Thursday in the morning at you're expecting about 211,000. Initial jobless claims, you want to watch this because if we are going to see a labor market that continues to weaken and maybe unemployment continues to rise, at some point the initial jobless claims numbers should start to spike. And then the markets will interpret a, lower non-farms number and, well, more cuts from the Fed. So definitely want to be watching that. You are going to get a bunch of ECB Fed speakers. I'm not sure if any of that's going to move our markets. But you will get a 30-year bond auction that comes out at 1 p.m. And same's true with the 10-year Treasury and the 30-year Treasury. Depending how demand is for this, it can also affect the whole long end of the curve, the 10 and the 20-year Treasury yields as well. Now, that's it for Thursday. On Friday, you are going to have your biggest data of this week, direct data. That is your Michigan Consumer Sentiment Survey. Widely respected survey that's been going on since the 60s. And it comes out at 10 o'clock in the morning. Last month, the headline number came in at 77.2. The expectation is 78. So you're expecting the sentiment will get a little bit better in the survey. The headline number doesn't really matter too much. What you really want to watch for is the subcategories. So the 5-year inflation expectations, last month that came in at 3%. Expectation is, again, 3%. Any rise there is going to be bad. A fall there is obviously good. Michigan consumer expectations last month came in at 76. Expectation is 77.3. And keep in mind, you want the economy to do well. You want people to feel optimistic and spend money. That's good for company earnings. That's good for the S&P 500 earnings. You don't want to see inflation expectations rise. And you don't want to see the consumer become less confident. In a perfect world here, you would want to see the economy doing well and inflation coming down. So any signs of inflation coming down, economy doing well, that is specifically good news for our markets. So current conditions will also come with this survey. Last month, you came in at 79. You're expecting 79.5. So higher, likely the better there as well. And then 1-year inflation expectations. Last month came in at 3.2%. The expectation is 3.1% for this reading. If you were to see, again, some big rise in 1 or 5-year inflation expectations, that's what is going to likely dominate the markets coming on Friday. So that will be very important. As you can see, it is highlighted in red. And then you will get Fed Goolsbee that speaks at almost 1 p.m. And he's pretty important these days. The markets tend to pay attention to Goolsbee. Fed Barr speaks at about 1:30 p.m. He really talks just banking policies, won't be important at all. And then your inflation numbers will come out for China at 9:30 p.m. on Friday. Markets will be closed, but that's definitely something to pay attention to. So kind of breaking all of this down, again, for ARM earnings on Wednesday, I think that's the biggest wild card. As I said, the stock has fallen a lot. If you're looking at a weekly candlestick chart, the week of April 19th, ARM fell about 31%. It's not as badly priced as it was before. It's still super expensive, and I'm really not expecting a huge collapse. I'm not expecting a huge rally either. Now, if ARM obviously misses, then you could see a large decline. But I think the real question is, does ARM affect just your AI stocks like NVIDIA and, who knows, right? Your other AI stocks. I don't think ARM will affect AMD or SMCI or those other stocks that have already reported earnings, but I think ARM could specifically impact NVIDIA. Now, would that cause a sell-off in the markets if ARM were to fall and NVIDIA were to sell off in sympathy? I don't know. I think overall, though, for this week, excluding ARM and considering, let's say, ARM is just a nothing burger earnings, it doesn't do much of anything, I think there's going to still be a lot of digestion from last week's good news. You guys got to keep in mind, big money, they don't move around their portfolios quickly. Okay. And there's a lot of a reason to buy, especially your small cap stocks. That's the area in which I'm bullish for in terms of upside. I don't think there's a lot of upside left in the NASDAQ. Sure, 5% or so to get back to all-time highs. Of course, that's still there. But I think with a 20% move still needed to get back to all-time highs in small caps, there's a lot of upside potential here. And even as, some well-known investment figures have said before, like Tom Lee, still expecting a 50% rally in small caps this year. I would assume if you asked him today, he's not expecting anything that drastic, but maybe a 20% rally, maybe to test all-time highs again by the end of the year in small caps would not surprise me. That's probably what someone like Tom Lee would say if you were to ask him right now. So I think there's still a huge reason to be bullish on small caps, and I think this week you'll see a lot more money positioning into those small cap stocks. So I like IWM more this week, but the NASDAQ also is at a very interesting level. You got rejected at that 50-day moving average. If you continue higher from here, then you're going to be flirting with all-time highs pretty quickly. If not, you're going to trade in between these three moving averages. 50-day moving average here at $436.20, your 20-day moving average at $430 per share, and your 100-day moving average at $426 per share. So I think you really want to watch the moving averages if you're into the technicals, because the NASDAQ just trades so well based off of them. But I'm not expecting any kind of big drop this week. I think this week's going to be a lot more bullish than bearish. And again, there is the whole sell in May go away situation. I don't know how much that is actually followed these days. That can also have an implication to the markets, but the contrarian in me would say if that's what people are saying, sell in May go away, markets probably rally anyways. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.